This is Shae Spitz. Welcome to Living in Nebraska. Welcome to my channel, or welcome back to my channel. As a reminder, make sure you hit that subscribe button and follow along so you get updates, weekly updates. I post a video every Thursday, so make sure you keep up to date on what is going on here in Nebraska. Today we're going to be talking about interest rates and what's kind of going on in the market with Jill DeBray at Charter West. But as a reminder, I am a licensed real estate agent in the state of Nebraska, so if you're looking to buy or sell, I would love to help you with any of your real estate needs. So let's get into it. So today I am here with Jill DeBray from Charter West here in Columbus, and we are going to be talking about interest rates and mortgage because over the past year, 2 years, the market has been very volatile and hard to predict. So tell us a little bit about what you are seeing now with a little bit of a shift in the market. We're starting to see rates
start coming down a little bit, yes, which we're excited to see.
Mm-hmm.
So they haven't dropped as much as people think, just because, obviously that's what the news say, and the news needs headlines and things, but the important thing is that we're starting to see them shift down.
Yes.
And so, like you said, I've been doing this 15 years, and these last 2 years have probably been the hardest years with where the rates have been and how volatile they've been. So it's kind of nice to see them coming back down. And seeing a little more consumer confidence. I think that'll get some people confident in getting back in the market as they come down.
What do you mean by consumer confidence?
I think people being able to afford their payments. And so I think people were nervous to start the hunt on looking at houses because they would come get pre-qualified and I'd give them a rate and then they'd get an estimate and rates went up. And so that's a little stressful for buyers. So I think as they start to come down, that gives them a little more confidence to shop because their payments are going down and there's not that risk of they could be going up.
Yes.
So
yeah, absolutely. So where are you? So obviously the Feds had met earlier, mid-December, decided to kind of hold them steady, which then kind of dropped the rates a little bit. So what I've seen anyway is they were floating around 6.5, maybe a little bit lower, a little bit higher, depending on credit score, loan type. Yes, loan type is a big one.
huge.
One of the biggest misconceptions that I get all the time is first-time homebuyer loan. Explain, because what I tell people, I said there's no such thing as a first-time homebuyer loan. It is a program attached to one of the 4 loan types that are out there. Is that correct?
Absolutely. Okay. So I want to start with one of the first misconceptions.
Okay.
You don't have to be a first-time home buyer ever in your life to qualify for a first-time home buyer loan. If you have not
Program. That's why people know.
Program. So you have to be a first-time home buyer if you haven't owned a home for 3 years. So if you sold a home and haven't owned one for 3 years, you are considered a first-time home buyer again. Also, there's other reasons. If you get a divorce and you don't receive any proceeds from that divorce, say you just give the house over to the significant other and get nothing away or get nothing from it and you walk away, you can be considered a first-time home buyer again. So there are some exceptions to become a first-time home buyer. So the program is not all banks do it, and there's a lot of rules to it. So it's something that definitely work with someone who knows what they're talking about. But the first-time home buyer program has income limits. And it goes by size of family.
Okay.
But the first-time homebuyer program has now a sister program. It's not for first-time homebuyers. You can be a first-time homebuyer. You cannot be a first-time homebuyer. But if you're over the income limits for that first program, it's a very similar program. Everything's the same except for the interest rates are a little bit higher. It's called our Welcome Home program.
Okay.
So if you are over income limits, been told you make too much money, this program allows you to still utilize all the perks of the normal first-time homebuyer program and being over those income limits. So with getting help with down payment assistance, not using a down payment, excuse me. So
that's awesome.
Yes.
Okay.
So those interest rates, the first-time homebuyer rates range anywhere in the low 5s up to the low 7s, depending on what program we're using.
Oh, wow.
So
okay.
There's lots of programs within, it's called NIFA.
Yep.
There's lots of programs within that program. that we can utilize anywhere from first-time homebuyer programs with very low income limits to veterans. Veterans get really low interest rates with this program.
Really?
And we don't even have to use, this is the other thing, work with experts. You don't have to use the VA loan to get the military rate.
Yes.
Tell your lender that you could go VA, but we're not going VA, and I can still get you a better interest rate.
Yes. Okay. So go VA, but not VA. What does that mean? What does that? Yeah. What does that mean?
Meaning that you would qualify for VA, that you are military, that you have that you were in the military.
Yep.
I can get you a much lower interest rate and use the FHA program or the RD program, but not go VA.
Really? Okay. So it wouldn't even be a VA loan. It would just be FHA or RD. Now, would it be NIFA then attached to it? So would it be the RD NIFA?
Right.
Okay. So tell us a little bit about what NIFA. How much of an interest rate lower, decrease do you see when somebody utilizes the NIFA program?
That's a hard question to say, like a percentage wise, just because, again, how we talked about credit score, debt to income right now in this economy. One of the biggest things we're seeing is stretching people's debt to income, meaning the gross income that we can use versus their debts and their house payment is really on the higher end. So that makes, because that's higher risk, that makes for a higher interest rate. But typically, so say I'm going to look at the conventional loan. Right now, when I priced out rates, it's anywhere from a quarter to a half point difference in interest rate, I'd say, typically.
Okay. So is the welcome home package the same? That quarter to 0.5% roughly, or is that still a little bit higher than the actual NIFA first-time home buyer?
Say that question again.
So the welcome home packet that you were talking about, that is a NIFA program.
Okay.
What are the interest rates? How does that compare to a first-time home buyer program?
Okay, so I have it right in front of me. So conventional interest rates today for normal first-time home buyer, if they fall within the income limits, no assistance with the down payment would be 6.125. If they were over income limits, or say they owned a home before, and the reason why we would do that is maybe we want to give them, because sometimes the interest rate with welcome home is higher than the normal conventional program sometimes. So the reason why I would go conventional is the one person where this rate is lower. It can be because of their credit score. Or if they want assistance with their down payment. They don't want to put, literally this program allows people to put couple thousand out of pocket, so which is huge. But that interest rate is anywhere from 6.875 to 7.125. But then the regular NIFA program is 6.125 to 6.375 for conventional. And people get confused on that. People think that that conventional, they can't go first time home buyer. They can. And the perk of that is lower PMI when you put less than 20% down. So PMI is something you pay when you don't put 20% down.
And it's basically an insurance policy for the lender in case you were to default on your loan. It doesn't go towards your interest. It doesn't go to the principal or anywhere else. It's an insurance policy basically for the lender.
Absolutely. Yeah, that's absolutely right. So the perks of going NIFA conventional is lower PMI, lower interest rate, lower money out of pocket. So, but it still makes your offer competitive because we're moving back to a buyer's market. We're going to see more needing conventional offers. So it will allow you to have that conventional competitive offer up against other offers.
But now NIFA will still require some repairs, things like that.
There is no appraisal. And that's one thing, NIFA, you go off of with your appraisal, off the loan type, not the program. So you go off conventional, RD, VA, FHA. So if you go NIFA conventional, you're just doing a conventional appraisal.
Good question. Yes. So, and I think that a lot of big misconceptions, especially for first-time home buyers or even people buying for the second time, because even though somebody owns a home, they don't know the process, even if they just bought. It's a whole nother ball game when you're trying to sell and you're trying to buy all at the same time. There's bridge loans, there's contingency offers, all of those things. But
and we offer bridge loans here. So,
and how does I guess
we're going to see more of those as well. So now that we're moving to a buyer's market again.
Yes. And so explain to me or to the people watching what a bridge loan does for them and what pros and cons they'd be looking at.
So a bridge loan allows you to pull the equity from your home to purchase your new home. So the part that people usually don't have is the down payment. So the reason why they need to do a bridge loan is they don't have their money is all sitting in their house, but they still want to buy this new house before, but they don't want to do it at the same time. Because if you do a contingency, we have to close on your old house either before or on the same day as your new house to get those funds.
Yep.
A bridge loan allows you to pull the equity out of your home, use that money to buy your new house, and you can close before and then sell your house after you do all that.
Yep.
Here's how we do it. We only go to 89% loan to value on your current house. Okay. So that leaves 11% equity. If you need to negotiate a little bit when you go to sell it, you have a little bit of room. Pay your realtor, pay your closing costs. We want to leave a little bit of room.
Yep.
But what we do with that 89% is we have options. Sometimes it makes sense to pay off the current mortgage out of the 89%, depending on what that payment is, to keep their payments affordable.
Yep.
Or we keep that mortgage there and we just pull out the difference towards the new house.
Okay.
So ultimately on that bridge loan, you're making interest-only payments.
Yep.
So I would work up the numbers, figure out what makes more sense.
Yep.
We do things for different reasons. Do we need to do things for debt-to-income reasons? Do we need to do it just because it's more affordable for the client, even though they can afford it? What option am I going to do? So, meaning, do I pay off their first mortgage and combine it all into interest only?
Yep.
Or do we have two payments on their house?
Okay. Which the one payment would still be their previous home plus the additional equity that they took out.
Right.
But they would have to have enough equity in a property for this to make sense.
To make sense, yes. And the debt to income still has to all work out. I've gotten very creative, and this is again why it matters to work with lenders who know what they're doing. I've actually taken the bridge loan and paid off all the other debts, and I've put a little down towards the house because it actually made sense to get rid of $2,000 worth of auto payments and credit cards, and it only increased their house payment by maybe $300.
Yeah.
So it made, just throwing fake numbers out there, but it just made sense to do a comparison. And I've had a lot of people be like, well, let's pay off all this debt that I've accrued in my life that are higher interest, and let's put less down on the house.
Yeah.
So, but bridge loans are an option if you get into a multi-offer situation where you don't lose out on that house.
Yes.
Something that a lot of people don't talk about that we just did with a client recently is a recast.
Oh, yes.
That is also, a lot of people are like, what's a recast? So I'm going to talk about a little bit something different that people don't know about. So a recast is something that we had a borrower who had some money to put down, but they didn't want to sell their house. And they didn't want to mess with the bridge loan and do all that type of thing. So we took that money and we put it down towards the new house. But they knew once they sold that house, they were going to have like $200,000 to put on this mortgage. It allows you to put that money that when you sell that house, as long as it's a certain percentage, a certain amount, towards this house, and they'll readjust your payments with that new down payment. And you don't have to refinance, you don't have to do all that. There is a fee with it, but it's still worth it because their payments will drop tremendously. But that allowed them to get into their new house without selling their current house because they had the money to put down on their own without doing all the bridge stuff.
And then do you have to do that recast within a certain amount of time?
No, I think they have to wait a certain amount of time, but they can do the recast at any time.
So even if it's like a year down the road or 2 years down the road?
Every investor, I will be honest, every investor has their own rules and their own caveats. So the nice thing is we have lots of investors. So I will figure out what is your plan, what is your goals, and we will make sure we choose an investor that fits your goals.
Yes,
so,
absolutely. So
because they all have different rules.
So anybody,
that's a good question.
When you're watching this, Jill has been around, like she said, 15 plus years. And so if you're looking for somebody to really get creative or think outside the box, or somebody to make it a pretty smooth transaction, even if it's just a conventional 20%, 30% down, she is your go-to woman. Charter West, Jill DeBray is your go-to. And again, I am licensed in the state of Nebraska, so if you are looking to buy or sell, I'd love to help you with any of your real estate needs. So Jill, as kind of a recap of what we all did or what we talked about today, is there's 4 different loan types. You have conventional, FHA, RD, and VA. Generally, the conventional is typically 5% down, and I believe for a first-time home buyer, it can be 3. Okay. If you qualify, of course. And then, because there's always this big misconception that in order for people to buy a house, you have to have 20% down. I'll talk a little bit more about that.
And I want to do a little addition to that. With our programs, we can even help with the 3 to 5% down where you only need $1,000 out of pocket. So
What program is that?
that's all the HUBAs. They're called home
yes.
buyer assistance with NIFA. So
Yep.
that allows you to go conventional, and you typically I see anywhere from $1,000 to max $3,000 out of pocket with that program.
Yes, and I've actually had people get money back when they did like an RD HUBA.
Oh, yeah.
You know, I've had people get money back because they put
I just
money
did that
down.
with someone.
Yes, so it's kind of nice. You buy a house and then you got money back. But because RD is 0% down, FHA is 3.5% down. But with FHA, you can have a higher debt to income ratio,
Right.
which is why we see a lot of people go that route, because people do have a lot of debt. So just know that there are tons of options out there. It's not, if you go to one lender and they deny you, I always recommend go to 2, 3, or 4, because you'd be surprised at what lenders can do and how they can get creative, how they can think outside the box. And not every lender offers the same programs.
Right.
And that's where a lot of people get confused. And you don't have to go to the lender where you have your money at. So that's another thing people think that they have to do is like, well, I bank over at so-and-so. So I need to go through there. You do not. You don't need to move. They don't have accounts here at Charter West or, you know, other banks. You don't have to move your money here. So, I mean.
Well, in some lenders, it's like any profession, like some lenders do everything. They do auto loans, they're doing business loans, and they're doing mortgage loans. So they know, what is that saying? A lot about a little?
Yeah,
Or
a master of.
a little about a lot. And then I can't think of the quote. Little about a lot. Where all I do is mortgage, so
Yeah.
I know a lot about a little. Meaning, all I focus on is mortgage. So we have That's all we have is options for. So we've gotten into situations where we've had to change loan types in the middle, and if you're not working with a lender where something happens and they don't have other programs to choose from, kind of saves our butt sometimes to be able to switch it. And not that we ever want that situation.
Yeah, because you want to get approval from everybody if you do go that route and whatnot. But it's not always the funnest, but sometimes you do have to do that in order to keep the deal together.
Whether
And
it's the property or something happens. Yes. Yep.
Yeah, so it's just educating your clients on all of that. So, well, Jill, is there anything else that you want to throw out there? I guess, where do you foresee interest rates? What's happening? Where do you see interest rates
I do
going?
want to tell people, if you're sitting on the sidelines, because they do say, you know, rates should really go down, you know, around May-ish, June, July 2024. If you're waiting for that, I don't advise it. You're going to see the 5 million people, they say, that are sitting on the sidelines waiting to buy. You're going to run into multiple bid situations. We are starting to see it a little bit now because people are just excited. They saw rates drop a little bit because that's a big deal to some people, the small rate that has dropped. But I personally think if you are thinking about buying, you should still do it now because you still have some negotiating power. Where once rates really drop in 2024, you know, around that May, June, July, think we're going to see bidding wars. And especially if you're a first-time home buyer, I don't think you want to get into those bidding wars.
No. Especially because now you can negotiate inspections, you can negotiate, you know,
Closing costs,
2-1 buy down, closing costs, those types. But inspections are a big deal, you know. And when you get into a multiple offer situation, you're likely not going to be getting your offer accepted if you want to do a whole home inspection. So those are, you definitely want to get into it now. You definitely, because you can always refinance later. You can always refinance later. So if you buy now and interest rates are at the 6.5 and they go down to 5.5 come May, June, July, you can always refinance. And the fee for that is very, very, very minimal, especially if you stay with the same lender that you financed with initially. So even though, again, like we expect interest rates to drop, now is a great time. It's a little bit of a slower market. There's not a ton of buyers out there because right now, just mainly because of the holidays and weather and people don't want to move in the winter and stuff. But buy now and you can always refinance later. And there's no limit on how many times you can refinance. Right. So if in 6 months they go down to 1% and 6 months after that they go down again, you can always continue to refinance. So
we saw a lot of that during COVID when rates had kept dropping tremendously. So, and if you think rates are going to drop to that again, they probably will not. So do not wait for that either.
At least not in the projected forecast. Anyway. Maybe in another 15, 20 years, but not right now. So, but is there anything else that you'd like to let anybody know about?
Just that, like you said, I've been doing this for 15 years. I feel like I have created a reputation of doing a good job and doing what's best for the client. And Also, we're the top purchase lender in Platte County and surrounding areas. We're the top NIFA lender in Nebraska. We're the top RD lender in Nebraska. So we have a good team. We know what we're doing. So you can trust us.
Very much so. So how can they get a hold of you if they want to contact you, Jill?
You can reach out to me here at Charter West, here in Columbus. You can call my cell, text me, 402-270-4722. Email me, reach out to me on Facebook. You can get a hold of me anywhere. So, and I'll get back to you.
Sounds awesome. And then if you wanted to get a hold of me as well, my phone number is on the down below. So you can always click that. And that is to me personally. I respond to the phone calls and text messages and all of that. So give us a call. Let us know how we can help you. And again, as a reminder, make sure you follow along, hit that subscribe button so you can keep up to date with what's going on in the market and also what's going on in Nebraska as well. Thank you.
Thank you.